we will look at is the first one we spoke about, working on yourself. The second one that we're going to talk about is the working on time. And like I mentioned, financial goals take time to achieve. It's not fast. It's not something that happens tomorrow. It takes time for you to achieve your financial goal. So give yourself the time and the space for you to be able to achieve that goal. Okay. So when you think about time, there's two aspects to time. So three actually, sorry, and it's possibly what attracted you to this. And each of them takes time for you to be able to achieve. So when you think about managing your expenses and creating savings, it's something that takes a lot of time for you to achieve, and it's not very easy for you to do it if you don't give yourself the time. Okay, so expenses can be divided up into two places. Number one, we have fixed expenses, and secondly, we have variable expenses. So fixed expenses are the ones that occur regularly. They could be weekly, could be monthly, could be annually. The amounts don't usually change. So if you think about, for example, rent, it remains consistently the same. If it changes, it only changes maybe once a year or once every couple of years. And same thing with, like, if you have a loan, if you have any car payments, if you have any other bills that usually are consistent, these are what are called fixed expenses. Then variable expenses are the ones that do not occur regularly, and the amounts could change according to the need or choices that you make. So these include things like clothes, gifts, money you spend on vacations, and things like that. So it's important for us to be very careful about for us to understand the expenses, number one. And then secondly, for us to make sure that we are not spending too much in terms of the expenses. And just to give you a few more examples, so fixed expenses could be rent, could be loans, could be mortgages, could be your car insurance, could be school fees, could be water, could be electricity. All those could be your fixed expenses. And then on the right-hand side, we have what are your variable expenses. So we have the money you spend on clothes, on gifts. We have black tax, and I'll explain what that is. We have money you spend in the salon or in the spa to treat yourself. And we have things like DSTV, because that could be a choice in terms of it being a need versus a want. So black tax, just to explain what that means. So black tax, usually it's a term that's coined to mean the fact that as Africans, we usually have a burden to make sure that our siblings are well educated. And usually if you're the eldest one, then our parents somehow along the way believe that if you educate the eldest ones, then you can take the time for them to then educate the rest as things go by. So that's what black tax is, and it's usually a burden on the elder or the people who are blessed in their family. And a lot of times you can think about it as a variable expense, because you don't know when it's going to come. You don't know what it's going to cost you, and at the same time, you can make a decision whether to spend in it or not. So when after looking at those two different types of budgets, so it's important for us to plan for where our money should go and not necessarily wondering where it went. So very simple principle that we should use is to divide up our expenses into two bits. So there's a famous saying that says, pay yourself first. So put money aside for your savings, and at the minimum, they should be 10% of how much you earn that you put aside for savings. And then everything else can be 90%. So of course, here we don't break down on what rent should be versus what your clothing budget should be, but just kind of work with this rough, simple example for you to know, how much to spend in savings and how much to spend on everything else. So to achieve this, there's a few things that I would advise. So number one is make sure you allocate money for necessities. And the key thing here is that you need to separate needs and wants. So needs could be, that you need to have a roof over your head, you need to have food, you need to have, many other things. But then wants could be, I want to live in a certain area versus another one. So can you afford to live in that area versus live in a cheaper area? And that's where you can differentiate a need versus a want. Then thirdly is to put your plan into action and to follow it through. It's important for us, once you do decide what your budget will look like, then you need to follow it and make sure that you put it into action. Otherwise, it beats the whole purpose if you do put together a budget and not necessarily follow it through. Then fourthly, it's to plan for seasonal expenses. So seasonal expenses could be like school fees. It occurs once every 3 months. So you need to divide, if your school fees is 30,000 shillings for your child, or for your campus, or for your further education, and you pay that for yourself, then you need to divide it by how long you have to save. So in the example of school fees, you could decide to say it's 30,000. So if I divide it by a term is 3 months, so I need to save 10 a month. So you just put aside in your monthly budget 10,000 shillings every month, and it's a much easier load than saying every 3 months I will figure out where to find 30,000. That's why we find banks making a lot of money from instant loan, from school fees loans, because people don't plan for these seasonal expenses, and it's very easy for you to just look at how long you have to save for it and divide it up, and do it for other seasonal expenses, like your if you have a car, like your insurance, if you have any other seasonal expenses that occur once. A good example is December is usually a big month, and you always hear the joke around people saying January, because you spend a lot in December. So why not make a plan for December? If you know December you will spend a lot, you need to spend some time with your family, spend some time with your friends, then plan for it. If I'm sure if you can be able to put aside money every month for your December expenses, it will be much easier than waiting for December to happen and then finding whether it's 10 or 20 or whatever the number of thousand shillings that you need to put aside for your December expenses. Then lastly, it's use financial instruments cleverly. And here, I'll give you an example in more detail as we continue, but make sure to use those financial instruments. For example, you could have a money market account, you could have a savings account. There is also simple things like Mshwari, who have I think it's a lock account or something, where you can put money aside and not necessarily be able to access it until a certain period of time. So use such financial instruments, and they will enable you to be able to achieve your goal. So a good question is, somebody could be saying, so I have obligations right now, and I can't be able to put aside 10% of my money aside today. So what should you do in that case? It's very simple. Make a plan. So start with whatever amount you can be able to put aside today. It could be 1,000 shillings. It could be 500 shillings. Start with that amount and start putting aside today. Then secondly, increase it, the amount that you put aside as you clear your obligations. So say, for example, you have a loan that you're servicing, a bank loan or a mobile loan that you pay. So when you clear a loan, rather than, and that loan say was 5,000 shillings, rather than saying this 5,000 shillings is now money that I can go drinking, or I can spoil myself with new shoes every month, then find a way to say, okay, instead of spending 5,000 shillings on new shoes every month, I would spend 2 on new shoes, and I will put aside 3,000 shillings for me to start my savings goal. Or even when you get more income, your employer gives you an extra 2,000 shillings in your salary, 10, whatever the amount. As you get that extra income, work towards achieving that 10% goal. And like I said, achieving the goal is a matter of time. So you need to build that plan and see it through. And even if you work in a job that you get bonuses, you get commissions, you get windfalls, usually people see those as holiday money, as I'll treat my friends because I didn't expect this money. But the real way to actually look at it, and the more practical way for you to approach it, is you can decide to divide it up and say, okay, I will reward myself because I did get this bonus out of the hard work that I put in. So maybe I will decide to save 70% of my bonus or my commission, and 30% I will spoil myself with a holiday, with a treat, with whatever it is that you do. But make sure that you put the biggest chunk of it towards a savings, and it will help you to achieve that 10% goal. So the second one is about managing debt. And in managing debt, I just want to come back to these headlines just to bring it home a bit more. So if you think about the 1 billion shillings that people were borrowing every month on Fuliza loans, What that meant is that, and Safaricom charges a 1% interest daily. So Safaricom was easily making 10 million shillings from each and every one of us who was accessing these Fuliza loans. So you can immensely see how big this is business for Safaricom and the banks, and that's why you see these advertisements in TV. They want to entice you in terms of how easy it is for you to get the loan. Just install the app on your phone, just dial star blah blah blah. You'll access your know what your limit is today, and if you fall into those traps, just see how much money they can make, and how big the opportunity is to them. So it's important for us to aim to have good debt. And just to bring it home a bit, we'll differentiate between what good debt is and what bad debt is. So good debt is, say, for example, you take a loan to buy land, to buy mortgage, because that usually appreciates in value, and therefore that is good debt. If you take a loan for you to invest in your education that could help you to further your income, that's also good debt. If you take debt to invest in a carefully chosen business, and here business is we have to be very careful with it, because people a lot of time take loans to invest in businesses that are not well thought through and all those things, and they end up being stuck with a debt that doesn't necessarily help them. So if you do take time to research the business idea, be sure with it, test it out first, and then only take the loan to grow the business, then a business loan can be good debt. And then lastly, if you find an opportunity where you could take a loan for you to invest the money, say for example in something that gives you a higher return than what you're paying in interest, then that of course could be good. But then on the other side, there is bad debt. And a good example is what we see a lot of times people doing. So they take car loans. Cars are usually depreciating assets, so they decrease in value as time goes by, and you're stuck with a loan on an asset that tomorrow is worth more than what it is worth today. Secondly is a credit card. So we get easily enticed with you can access a credit card, your limit is increased, those kind of things. And credit card debt usually funds lifestyle gaps that we have. So in case today you really want to buy this new TV and you don't have the money, then you think, okay, I'll take the money from the credit card and pay it slowly over time. And that's an example of bad debt. Mobile loans, as we spoke about, we've seen the Fuliza example of how much Safaricom is doing. Usually also these fund lifestyle gaps, and these are also bad debts. And then lastly, we have cash advances that you can get from your employer. You apply for an advance on the 15th, knowing your salary is coming on the 30th. So unless it's an emergency, you should really avoid these things, because it simply means that if you do take a cash advance today, then your salary will come less what you took as an advance. And of course, that means that you'll have to find more money you'll have to take another loan for you to pay what you lost in terms of your income. So good debt, key things is that it helps you grow in value. It's usually within your budget. And remember, we spoke about preparing a budget, and it usually has a low interest rate. Bad debt, on the other side, usually funds your lifestyle. You want to be seen as a certain caliber or a certain level of a person. So that's what bad debt usually funds. It usually fills expense gaps. So when you do your budget, you find, okay, I have a gap of 2,000 or 10,000 or whatever the amount is. Then you take on debt to fill your expense gap. The problem is you'll be stuck in that debt forever, because you'll always have to find another 10,000 the next month, because that expense gap, you've not filled it in a sustainable way. Then usually bad debt is also unplanned and not within your budget. And sometimes it can be backed by a depreciating asset, in the example of a car. So how should you build a plan for you to clear your debt, and what's the most effective way for you to do it? So if you do have debt, then most debt you should be able to make a plan for you to clear it within 3 years. If not possible, it can be 5, but at the same time, just it's about starting and the journey and sticking to it, and less about the time period that it takes. So there's 2 methods for you to clear debt. The first one is called the avalanche method, and I'll explain it what that means. It's simply that you pay off the debt with the highest interest rate first. So in this example, you have somebody with credit card debt. that's at 1.5% interest rate monthly, which is about 19.5 annually. You have a mobile loan that you pay 3% monthly, which is about 42.5 annually. And then you could have a car loan that you service at 14% annually. So using this method, the payoff sequence for your loans is that you'd work towards paying loan number 2 first. And after you've paid out loan number 2, you then pay out loan number 1. And then lastly, you'd pay out loan number 3. So that's a simple sequence that you'd use in the avalanche method. There's also what we call the snowball method. In the snowball method, what happens is you pay off the debt based on the size of the loan. So just adding a few more details to the same examples you've looked at. So you have a credit card loan that's 10,000 shillings at 1.5% monthly interest. You have a mobile loan that's 50,000 at 3% monthly interest. And then you have a car loan that's 100,000 at 14% interest annually. So in this particular case, because you're starting with the smallest loan and working towards the biggest one, what happens is you take the first loan, you clear it, you then go to the second one, you clear it, and then you go to the third one and clear it. But there's two factors to consider in order for us to understand what is the better method of these two. So number one is the interest exposure. So how much do you pay back to your financiers as interest? So for example, if we use the snowball method, the mobile loan, which is just 50,000 shillings, but at 3% monthly interest, you're actually paying more in interest monthly compared to the credit card loan. That's, yes, smaller, but at 1.5% monthly interest. So that's why it's important for you to understand how much interest you're paying. And I don't want to go into a lot of the math to understand what the actual interest value you're paying is, but it's important for you just to look at the numbers and to understand what that looks like. And then secondly is the time value of money. Just to explain in the briefest way is that a shilling today will not cost the same as a shilling tomorrow. It will not buy you the same as a shilling tomorrow. So the sooner you can be able to clear your loans, the lower you can get your interest rate to be, then the more you'll be able to achieve by you clearing your loans faster. So based on these two factors to consider, what we then find is that the avalanche method is usually better than the snowball method. So in case you have different types of debt, so do go back to the contract, look at what each of them is charging you on a monthly, on an annual basis, and then from there, work out which one you need to clear first. And then once you clear a loan, let's say you are paying 1,000 shillings every month for your mobile loan, then once you do clear that, don't take that 1,000 and put it into your expenses or decide this is money for you now. Take that same money that you are paying on that loan and then add it as an increment on your second loan that you're now working towards finishing. So in this case, if it's, for example, the credit card debt, then you'd move, if you're paying 5,000 for your mobile loan every month, then you move that 5,000 to become an additional payment to your credit card debt. So if you are paying 1,000 for your credit card, you'd now be paying 1,000 plus the 5,000 you had from your mobile loan, which would be 6,000, and it will enable you to clear your credit card debt faster. And then once you finish your credit card debt, then you take the full 6,000 and then put it as an incremental payment on your car loan, and you'll be able to clear your car loan faster. And this, for most people, when you do this math, it usually works out to clearing your debt within 3 years. Okay. So the last bit is on getting more sources of income. And I just wanted to start with a simple quote from the Bible that usually says, "Man shall not live on bread alone." And we'll also illustrate it with simple examples from companies that we know locally. So we have a company like Safaricom. If you think about the sources of income for Safaricom, so they're a traditional telecom company. So what they do is they charge us money every time we make a call, every time we send an SMS, and also to use data, they charge us money for that. But they've actually expanded from just the traditional telecom ways, and they get more money just from offering more services. So secondly, they invest in they sell phones, they sell accessories, and I think now you can even get a phone that you pay, I think it's 20 shillings every day. So that's of course making them money and additional money from just you calling and sending a message. Thirdly, they have internet which you can connect to. They provide M-Pesa, which of course we know is very big for us, just to send money to people. And then they also have certain partnerships with banks, good examples of Fuliza and Mshwari, where they make money. So taking the second example of KCB. So KCB within the banking sector, they of course work with the traditional ways of banking. So they charge us fees for you having an account, could be monthly fees for withdrawing your cash and those kind of things. They provide loans, and also they invest the money that we give them, of course, making some interest income on that. So the other thing that they've done is expand their ways of making money. So they invest in businesses. We of course know they have the Biashara Club, they have Lions Den, which they front a lot, and all these are to add them more money because they are expanding their sources of income. And then they also offer mobile loans, which are aside from the traditional loans where you have to go to a bank physically and sign forms and get approval. They offer a loan that you can install an app on your phone or whatever it is and get the cash quickly. And with this, they do make a lot more money. So what about you? Do you just rely on your salary? Do you just rely on your business? If you're a farmer, do you rely on just farming, or do you have more sources of income that you can then leverage on? And if one does not work out, then you can be able to make more money from another one. So just to come to the point that it's important for us to expand our sources of income. And income can be divided into two bits. We have active income, which is usually earned income. And this usually comes from our jobs, usually from us selling our time. So you work from 8 to 5 or 9 to 6 or whatever your hours, and you earn a salary, you earn bonuses, commissions. It could be profits from the business that you run. But all this, the problem with earned income is that number one, it's usually prone to higher tax than passive income. And then secondly is for you to earn more, you literally have to work more hours or figure out a way for you to clone yourself. Because if you want to have a higher salary, it's either you wait a few years, get a promotion, or you figure out a way to work more hours, maybe earn more in terms of commissions and bonuses and those kind of things. But then passive income, on the other hand, is you don't really have to spend your time. It usually makes money for you as you sleep. So if you invest in a business and the right kind of a business that can make you money without you being there, so that can make you profit income. Rent, for those people who are landlords, of course, they just wait for the month, the calendar to change the month, and they then earn more income. The thirdly is dividends. If you have stocks, then you earn money from your dividends. Then you can also have interest income that you get from either lending money or from your investments. And then lastly, we have capital gains. If you have stocks and tomorrow they gain value, today you bought them at 10, tomorrow you sell them at 20, then you earn income there because the asset has increased in value. So it's important for us to find a way to make money while we're sleeping. And few ways for us to do that is to find the right balance, and this takes time. So for you to be able to make the money and move from just relying on from relying on active income to generating passive income, it takes time. So as I mentioned, it's important for you to start doing it now and then give it time to grow. If you do start a business today, if you invest in building or buying land for you to then build a house for you to then start collecting rent, it's going to take time. Because if say for example you're relying on your salary or your savings, it will take time for you to start putting the money aside before you can be able to buy the land, and then put the money aside again for you to start building. But the important thing is to start now. If you don't start now, you will not reap the benefits. Then thirdly is don't take too much time perfecting the plans. Just find ways for you to get started now, and then learn as you go and correct as you go. If you take time to perfect the plans, build a 20-page business plan, what stops somebody tomorrow from starting this exact same business that you want to do? So we really have to figure out a way, if you well research your business idea and you're happy with it, you can decide to start it in a simple way today, and then over time correct, learn, invest in learning a bit more about the business, and then over time you can then perfect the plans as you go. And lastly, preferably we should invest in something that does not require capital. So a lot of times what kills businesses is the fact that they have fixed expenses. Fixed expenses could be rent, could be that you have a car that you need to keep servicing and those kind of things. And that capital usually kills businesses. And it also comes with a risk. So if you can find a business that you can start from your own home before you necessarily have a shop, then start it today, because the only thing it will require is for you to cut a few square foot in your bedroom or in your sitting room or whatever it is, and then you can then invest a little bit of money that's of course lower risk than you paying somebody rent every month, and whether you make money or not, your rent is due and payable to them. So I'm sure the question you're asking yourself, so how do you expand your income and expand your income sources? So the problem with active versus passive income is that it takes time. You have to start with active income. You have to start with your investing your time before you can then convert and start earning passive income. So here's just a few sources that you could start looking at what you can do. So a lot of these sites, Upwork, Fiverr, Hustlevid also has a few more inside. So if you go to these sites, you can then decide what you want to do. So say, for example, a long time ago, I used to make money from doing online writing. I used to do designs for people and those kind of things, and they would pay me money for it. And back then I used to use Upwork. Of course, now over time I've not been able to do it, but it used to be a very good source of income. And still to date, there's still people who do work there. And and if you can start today, just learn a new skill. The good thing is we have the University of YouTube that is free. If, say, for example, you want to learn how to do article writing, if you do go to YouTube and just type how to write articles, you get thousands of videos that you can watch. Just give yourself the time to learn. And over time, you can now start having that active income, which you can then convert to passive income.